All right, friends and family and complete strangers who randomly tripped over this on the internet. It's time for another This Week in Real Estate. We're going to briefly hit the numbers because those of you that have been tracking week over week, you know we're trying to pick up lead measure trends. That way we're not surprised by the lag measured numbers at the end of the month, right? We're trying to preemptive strike because look, it's still a great time to sell your house. There's still a ton of equity over, I think like 10, 12% over 2020 when we thought we were all going to die because of COVID and prices shot up 30% year over year. Even though we're down 17, 18%, we still have another 10 to 14 to fall before we're back to that 2020. And the reason my numbers were a little off right there is it depends where in 2020 you go. If you ask me, arguably the last time we were in a healthy market really was 2019, not even 2020 from a month supply. So I said briefly, because then I want to talk to you about why it's critical to start tracking a baseline now and how we can go about doing that. So look, here's the numbers. I don't keep them from you. This is my spreadsheet hot off the presses. And you can see last week versus this week. So when we say, hey, new listings are down 17%, 16.8, sounds bad. You're down 13 listings, right? Our new contracts, that's active under contract, pending, in escrow, that sort of verbiage, it's only down 1. So somebody could say, we're down 1.5%, but 1. This is actually a really good sign right here, especially because you looked at closed, dropped off quite a bit, 12.5%, 11 deals. That's real. Hold staying the same is good. Days on market going up makes me scratch my head like, okay, let's pay attention a little because 31 to 38, that's a jump. That's a full week, right? And when you're selling, that makes you nervous. But look at this average sales price. We're up 9% week over week. That's after dropping 9%. So we're almost right back to where we were. There was almost 9.5. So we're still down 0.5% on price, right? But again, if we scroll up really quick and just look, I mean, we're up on price. Week 2, week 1, we're up on price. Week 2, we're down. Week 3, we're back up. I mean, the month of October is shaping out to be about an $800,000 average price point from Glendora to Rancho. So don't forget, you'll see Glendora to Rancho down here at the bottom of my tab. Then you'll see Glendora, right? Then you're going to see Long Beach, Rancho, Mo Valley, right? We track certain areas on purpose. One, because if we say we're technology based, then we got to be able to produce videos and get it out. But if we also say we're agent enhanced, then that means we have to strategically hire agents that can give you local expertise, especially when the market's on the move. See, everybody thinks when the market's trending down, that's when they're like, oh, now I need an agent and the market and numbers. And people think that, oh, the market's going up, so it doesn't matter. See, you need an agent on both sides to tell you what's happening in your market. Because if you look and you look at just your city, you're going to get a different valuation. If you look at just your zip code within a city, you're going to get a different valuation. If I literally go less than a quarter of a mile north out of my office right now, price points go ping by like $200,000. So we got to get very specific in your neighborhood. That's why we hire local agents, technology based, so we can have conversations anywhere in the world, any time of the day. We can track data. We can give you stats and trends, but agent enhanced because you still need local expert boots on the ground in order to make sure we're winning. So this week, the market relatively flat. We need more listings. We need more inventory. Sellers, that it is still technically a seller's market. We haven't broke into the high 3 months of inventory yet. We're still 2.1 months of inventory for all 8 cities between Glendora and Rancho. When we start getting into 3.5 and 4 months of inventory, buyers are going to have a little bit more say so. But sellers, the inventory is low, which is why our days on market are creeping up a little bit because buyers are still waiting. Like prices got to come down. Prices got to come down. And as we just saw, they're sort of holding right now, right? Sellers are saying, okay, we ate 15 to 17%, depending on the city over the last 60 to 90 days. And the buyers are saying, yeah, but those interest rates are pegging us, right? And so we still have low inventory. So we're just sort of hanging on right now, which is an interesting thing. Buyers, it's a great time to go buy a house right now. Sellers who are on the market, they want to sell their house. You're saying, I want to buy it. Prices are down 15 to 17%. Okay, what's something we can do to get you into the house? It's called an interest rate buy down. Sellers, think about this in your marketing, and buyers, think about this when you're out shopping, right? You might want to pay, hey, look, this house is listed at 600. I could buy this for 600. But then you look at that 7% interest rate or 6.75%, and you're like, man, the payment's just too high. But instead of trying to go and beat the seller up from 600 to 575 to get your payment down, Instead of asking them to eat 25 grand, you can go in there and say, hey, would you pay down my interest rate? Would you donate $15,000 to the buy down? And you're going to get almost a full point, maybe a point and a quarter off your interest rate. So now the seller doesn't feel like he's getting beat up. You're winning as a buyer because you just locked in a 30-year note and saved a point to a point and a quarter on your interest rate. This is how the buying and selling public come together, right? So we can protect values in our community. We can protect the housing industry within our community. And it doesn't matter what the states and the federal government try to do to manipulate the markets. We can come in and say, okay, prices needed to cool down. They've cooled down. They have a little bit more room to cool down. And even though inflation's up and rates are up, we can help offset that. Not we as agents, we as the citizenry, we as the people that want to buy and sell real estate. We just have to figure out to say, okay, if they want to change the rules of the games, how do we win with the new rules? And this is how. So buyers, if you've got questions about that, don't hesitate to reach out. 626-727-8178. Give us a call, shoot us a text and say, tell me more about this interest rate buy down. Sellers, if you want to know how to properly market your house while still getting great, I mean, you're still over by over 10% in all cities, over 2020 pricing. It's phenomenal. Like you still got a lot of gravy before we hit that new floor. If 2019 is our new floor, we start to go below 2019. That's another conversation, but you still got gravy right now. Go get that gravy and start offering to buy down your buyers' interest rates to increase traffic. This week in real estate, I love it. I love you guys. Your time and you are both valued and appreciated. Thanks for hanging out with me for a couple of minutes as we talk about real estate. See you next week.